To recap, Q2 2021 was a record quarter on many levels. We achieved record production, deliveries, and surpassed over $1 billion in GAAP net income for the first time in Tesla history. I'd really like to congratulate everyone at Tesla for an amazing job. This is really an incredible milestone. Chip supply is fundamentally the governing factor on our output. We expect to be producing the new design of the Model Y in both factories in limited production later this year.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in absolutely shocking, surprising news, Tesla once again crushed every meaningful record in their latest quarter. This seems like the perfect opportunity to once again remind you guys and girls of a few words of wisdom / warning, and that is, don't bet against Elon. Never a wise idea. And of course, if you guys would like to warn others about the dangers of betting against Elon Musk, check out the link in the description to the merch store. You can pick up shirts, hoodies, mugs, and more. So in this video, the first of a few on Tesla's incredible Q2 earnings, we're first going to listen to some highlights from the earnings call from Elon Musk. Then we'll run through Tesla's earnings report and pull out a few highlights. So with that said, let's get into the video. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously, free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
While we're making cars at full speed, the global chip shortage situation remains quite serious. For the rest of this year, our growth rate will be determined by the slowest part in our supply chain, which is there are a wide range of chips that are at various times the slowest part in the supply chain. I mean, it's worth noting that if we had vast numbers of vehicles and cells, we would not be able to make them. If everything except the chips, we wouldn't be able to make them. The chip supply is fundamentally the governing factor on our output. It is difficult for us to say how long this will last because we don't have. This is out of our control, essentially.
Now, this is a critically important factor for Tesla stock investors to understand. It is chip supply that is the current limiting factor for Tesla increasing their production and deliveries. It's not battery cells. It's not production capacity. It's chip supply. For those of you who didn't catch my video yesterday about Tesla in 2026, long story short, 6x from where we are today, about a $4,200 share price for Tesla stock in 5 years' time. I've actually had to recently revise my estimates for Tesla production downward as a direct result of the global chip supply shortage. Tesla's doing their best to mitigate and manage this, but it is having a material impact on their ability to produce as many vehicles as they otherwise could. Yet despite this enormous headwind, Tesla's still growing production quarter over quarter at a ridiculous rate. So a round of applause to everyone at Tesla, especially the teams managing logistics and supply chain. This is a really incredible effort, and I don't think many people appreciate what Tesla has actually pulled off this quarter. For those of you who haven't been following along at home, most other automakers have explicitly stated they've lost production of 10,000, 100,000 plus vehicles due to chip shortages. Effectively, they're like, well, we can't get the chips we were planning on having, so fuck it, we'll just shut down our production lines. Tesla has had some impact, but they've still managed to work around this, which you're going to hear more about in just a moment.
In fact, even achieving the output that we did achieve was only due to an immense effort from people within Tesla. We were able to substitute alternative chips and then write the firmware in a matter of weeks. It's not just a matter of swapping out a chip. You also have to rewrite the software. So it was an incredibly intense effort of finding new chips, writing new firmware, integrating with the vehicle, and testing in order to maintain production.
This is an incredible insight, one of the most important moments on the entire earnings call, and I'm sure you're not going to hear about this on CNBC tomorrow. Let me explain why. This is a key insight into Tesla's determination and agility, in addition, their software prowess. As I mentioned, a lot of other automotive manufacturers are losing 100,000 plus vehicles of production because they can't get the chips they need. Tesla just decide, you know what, fuck it, we'll just source some new chips, write new firmware in a couple of weeks, and get things moving along, and that's exactly what they've done. There isn't another automaker on the planet who has the software expertise to be able to do this. This is why Tesla is being least affected by the global chip supply shortage.
We expect to be producing the new design of the Model Y in both factories in limited production later this year.
Now, this is an extremely bullish comment from Elon Musk. Of course, anything could happen, but the fact that Tesla is still today, mid-2021, are targeting to begin production in limited quantities of the Model Y in both Berlin and Austin by the end of this year is nutty. The Berlin factory is about 6 months behind Austin in terms of construction speed. Shout out to bureaucracy and red tape, but this is a great template. It could be less than 18 months between the commencement of construction to the first vehicles being produced and delivered from the Texas Gigafactory. This is a great template for future factories globally. Tesla's Shanghai Gigafactory went up in record time, but given the fact that we understand the work ethic in China and the potentially relaxed regulatory environment, this was to be expected. The fact that we're now seeing similar construction timelines on ridiculously large factories, somewhere around that sort of 15 to 18 month timeline is my best guess, gives us a great template for future Tesla factory construction speeds, assuming that they can't improve the process even further. At the end of this year, Tesla could have doubled the number of factories it has currently producing vehicles, and keep in mind, just the Berlin factory alone, when it's fully built out and fully ramped, will be producing 2+ million vehicles per year, more than double Tesla's entire global output as I record this. And that's not even including any production from the Gigafactory in Texas, which I personally assume is actually ultimately targeting total production volume of 3+ million units per year. I don't have any inside information on that. That's just based on my assumption of the size of the factory, the location, and the demand in the US for the Cybertruck, Model Y, and other future vehicles. If we do some really rough math here and assume 2 million vehicles from Berlin, 3 million from Austin, that puts us at 5 million vehicles of global capacity. Then we've got Shanghai, which is ultimately going to expand towards 1 million units per year. We're now at 6 million, plus Fremont, well over 500,000 as well. We're around 5.5 million vehicles of production capacity just from Tesla's currently operating and or under construction factories. That's approximately 1/3 of the way to their end of decade goal of 20 million vehicles per year. I don't think Wall Street understands what's happening right now.
The Model Ys in Texas and made in Texas and Berlin will look very much like the Model Ys we currently make, but there are substantial improvements in the difficulty of manufacturing. So for example, the Model Y made here and in Berlin will have a cast front body and a cast rear body, whereas the one in California has a cast rear body but not a cast front body.
The implementation of a front casting for the Model Y body as well is going to make an enormous difference in two areas that really matter. One is the actual cost to produce the vehicle. Far less parts and processes means it's way cheaper to put the vehicle together and better quality overall. Two, and even more important, given the fact that Tesla is production constrained and can't actually meet the demand that exists for their current vehicles, it's also going to speed up the manufacturing process enormously. And there's a final element that matters as well. It's also going to mean that Tesla, from the same size factory footprint, can produce more vehicles overall because there's less parts and processes involved, which means there's less stuff that needs to be stored and or moved around the factory and involved in the production line going from beginning of vehicle to end product.
We're also aiming to do a structural pack with 4680s cells, which is a mass reduction and a cost reduction. But we're not counting on that as the only way to make things work. We have sort of a backup plan with a non-structural pack and 2170s essentially.
Unsurprising, but good to know that there's a backup plan as well. If the ramp of the 4680s and the structural battery pack has a few more hiccups than Tesla anticipates, it's not going to get in the way of them continuing to ramp and scale production.
We have had some factory shutdowns due to part shortages, and we hope those will be relieved in the coming weeks and months.
And there you go, folks. Elon confirming that Tesla has actually had some downtime in their factories simply because they didn't have the chips to put in the vehicles they otherwise could have produced. This is one of the key reasons that I've recently had to revise down my 2021 delivery estimates.
We're making great progress on full self-driving. Some of the progress is not easy to see because it's at sort of a foundational software level. And so then it ends up being sort of a 2 steps forward, 1 step back situation. But over time, if you do 2 steps forward, 1 step back, and keep going, you do move forward.
This is an important clarification from Elon Musk. A lot of people are a little bit confused about the performance of FSD version 9, the beta software currently being tested by around 2,000 users. Tesla, having removed radar from the hardware stack and now relying on pure vision, have had to take one step backward. They've effectively rebuilt the entire foundation of the software. But this ultimately is going to allow them to achieve superhuman quality, pure vision performance, much better than anything they could have achieved by combining radar plus vision.
Over the last 2 years, our vehicle delivery volumes have more than doubled. This volume increase was made possible by a steady decrease in ASPs of more than 10%, driven by a roadmap to increase affordability and shifting mix towards our more affordable vehicles. Yet over that same period of time, our auto gross margin, excluding credits, has increased nearly 10 percentage points, to our highest yet since the introduction of Model 3. This is only possible because our average cost per vehicle has reduced by more than the reduction in average price.
Now, just for the record, this is kind of insane. The fact that Tesla has been able to drive down the cost of their vehicles by more than 10%, allowing them to maintain, actually improve their margins while reducing prices and exponentially increase demand, is stunning. And we're going to keep seeing this into the future. There is no end in sight. Tesla will keep driving the cost of their vehicles down, doing things like the front casting now in the Model Y as well, which will save a ton of money, time, and drive costs down even further while increasing margins. In addition to that, I don't want to read into the tea leaves too much there, but it almost sounded like there was an implication there from Zach that by reducing the average selling price, the cost to consumers by around 10% on an average vehicle, demand has approximately doubled. Just think about that for a moment. Imagine if that's the case, for every 10% Tesla can shave off the price of their vehicles on average, demand doubles. Interesting. And now let's have a look at some highlights from Tesla's Q2 2021 earnings report. Profitability, $1.3 billion GAAP operating income, and an 11% operating margin in Q2. For those of you who aren't aware, 11% operating margin is absolutely insane. And guess what? It's going to get even better from here. $1.1 billion of GAAP net income as well. Tesla putting over $1 billion in the bank in a single quarter. And an absolute shocker for many, a 28.4% GAAP automotive gross margin. Even if you back out regulatory credits, it's over 25%. And as I've said repeatedly, I actually believe over the long term, Tesla's margins are going to march steadily toward 30+%. And as we discussed in the earnings call highlights, with global vehicle demand at record levels, component supply will have a strong influence on the rate of our delivery growth for the rest of this year. Chips are the limiting factor, not demand, not Tesla's production capacity, chips. And something that's not going to get a lot of attention, but is incredibly important. As we know, Tesla successfully launched Tesla Vision in Q2 2021. This is going to become an enormous component of Tesla's business, driving their autonomous software, and I think over the long term, also be something that's licensed to other automotive manufacturers who attempted and failed to catch up to Tesla with their own autonomous strategy. It's only a matter of time. Again, my two favorite numbers from the entire financial summary: automotive gross margin close to 30%, and an absolutely ridiculous 11% operating margin. 1 year ago, Tesla's operating margin, 5.4%, and on average over the last 12 months, probably around 6 or so percent. Almost a doubling, and things just get better from here. And just a couple of additional highlights in terms of the financials. Revenue. Total revenue grew 98% year over year in Q2. Just let that one sink in a moment. Revenues doubled year over year. What even is this? And curiously, Tesla's Bitcoin-related impairment, just $23 million, below a lot of expectations. The implication here, I guess, is that Tesla bought Bitcoin even cheaper than most people were estimating. But hey, who knows for sure? If anyone's got any ideas, maybe understands what's going on here a little bit better than I do, please let me know in the comments below. Most were expecting closer to $50 or $100 million impairment. And a note from the Chinese Gigafactory, we have completed the transition of Gigafactory Shanghai as the primary vehicle export hub. This is great news. No longer is Tesla exporting vehicles from Fremont to other parts of the world, at least not primarily, now happening from China. Why does this matter? Labor costs are lower in China, materials costs are lower in China, and especially due to the localization of the supply chain. And generally speaking, it's true, the quality of the vehicles being produced in China, definitely a cut above the vehicles being produced in Fremont. In short, better quality, more profitable vehicles being exported to other countries until local production can commence. This is a very good thing. And if we look at installed capacity, Tesla has capacity now for S and X just out of the Fremont factory of 100,000 units per year. Model 3 and Y combined production capacity of around 500,000. And in Shanghai, around 450,000 of combined 3 and Y production. Well in excess of 1 million units of annual capacity already available at Tesla's disposal. And quite interestingly, when we look down the list a little bit here, Cybertruck, Tesla Semi and Roadster in development, and so is future product. My best guess here, Tesla's $25,000 vehicle, but hey, who knows? Could be anything, could even be a Tesla van. Let me know your guesses in the comments below. The point is, however, all 4 of these projects in development. This suggests to me that we're not that far away from seeing this future product unveiled, maybe sometime in the next 12 months. And this is a really interesting graphic showing Tesla's market share of vehicles by region. Now, this isn't share of electric vehicles, this is share of vehicles. This is what we call an exponential growth curve. We can see the trend here quite clearly, Tesla increasing their overall share of the vehicle market in major key markets including US and Canada, Europe and China. Some updates on autopilot and full self-driving. After selling over 1 million vehicles equipped with radar, we have collected enough data to start removing it in some regions. The removal of radar, which is enabled by our collection of a vast data set of corner cases, allows us to focus on vision and increase the pace of improvement. Again, I just want to emphasize, people aren't understanding the implications here. The fact that Tesla was bullish enough and confident enough in pure vision to literally remove radar from the hardware stack, stop putting it in new vehicles produced, and stop using it in the software is incredibly bullish for their confidence in being able to solve autonomy with pure vision. In addition, the speed, the rapidity with which they were able to actually collect enough data to remove radar from the hardware stack is astonishing. And again, I want to emphasize, there's no other automaker on the planet who has the fleet. No one else can get the data. Tesla has won the race to solve full self-driving, and no one is ever catching up. They will always have a substantial lead because they will always have the largest fleet, and therefore they will always have access to the most high quality data for training. In terms of vehicle software, again, I just want to highlight this point. Quote, our electrical and firmware engineering teams remained hard at work designing, developing, and validating 19 new variants of controllers in response to ongoing semiconductor shortages. This relates to the point earlier when Elon Musk was talking about replacing chips with other chips and having to rewrite the firmware in a matter of weeks. This is an incredible achievement and once again emphasizes Tesla's incredible software capabilities. No other automaker could have done this. And some notes on the 4680 cell. Quote, we have successfully validated performance and lifetime of our 4680 cells produced at our Kato facility in California. We are nearing the end of manufacturing validation at Kato. Field quality and yield are at viable levels, and our focus is now on improving the 10% of manufacturing processes that currently bottleneck production output. This is a great quantification of where Tesla is at here. Basically, 90% of the production processes, no problems whatsoever. It's just that last 10% that are the major bottlenecks. They're just trying to iron out the kinks. This is very bullish. Now onto Tesla's energy business. 2 key quotes here. Energy storage deployments more than tripled year over year in Q2. Of course, this is a very lumpy aspect of Tesla's business. As we can see on the right here, Tesla energy storage deployments, huge variations quarter to quarter. This obviously to do with commercial customers. If in one quarter, Tesla does an enormous storage deployment for a large company, say for example like Apple or an energy company, this can have huge variation. But below here, we can see Tesla energy storage deployments in gigawatt hours trailing 12 months. This smooths things out and shows the trend. Again, exponential growth. Another quote here in terms of solar. Solar deployments reached 85 megawatt hours in Q2, more than tripling year over year. Once again, very bullish sign for Tesla's energy and solar business. And now on to Tesla's outlook. Volume. We plan to grow our manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. So again, Tesla on track to continue compounding their annual rate of growth at over 50% for an extended period of time. Profit. We expect our operating margin will continue to grow over time, continuing to reach industry-leading levels. And again, this is where Tesla's operating leverage really comes into play and we start to see Tesla bringing in billions and billions of dollars of profits per quarter, while simultaneously driving the cost of their vehicles down, lowering the average selling price. I don't think most investors are truly appreciating the impact of operating leverage, especially over the coming years for Tesla. We're going to see profitability and cash on hand go to the moon. And Tesla once again reiterating, I quote, we believe we remain on track to build our first Model Y vehicles in Berlin and Austin in 2021. This is surprising to me. I'm a little bit more bearish on Berlin actually getting any Model Ys out before the end of the year, but hey, time will tell. In either case, this is great that Tesla still believe they're on track to make this happen. And some great photos here showing progress on the Berlin factory. Paint shop looks like it's pretty much done and dusted, ready to roll. We're now looking inside the Texas Gigafactory and the stamping press, and now onto the Model Y body shop in Texas. Now, just want to take a pause here, guys. We're mid-year. It seems exceedingly likely that production is not that far away. It's been 12 months since construction commenced, and this is the progress. This is what it looks like inside the factory. It is stunning how quickly Tesla is moving. And I've saved the best till last. Trailing 12-month metrics. Look at this trend, guys. Vehicle deliveries following a beautiful exponential growth curve. Look at this rapid increase towards the tail end over the last 4 quarters. Stunning. Tesla's operating cash flow and free cash flow trending heavily in the right direction again. Such a huge increase. Breakout growth in the last 4 quarters when we're looking at the trailing 12 months. And finally, from a stock investor's point of view, probably the most important graphic on the entire presentation. The trailing 12 months net income and adjusted EBITDA. This trend is just beautiful. And remember, this is smoothed out a little bit because we're looking at the trailing 12 months. But in this time, Tesla's been building 2 new enormous factories and investing heavily in new equipment as well. Net income has transitioned from negative to very positive, and the trend will continue. In short, Q2 2021 was a stunning, super impressive quarter for Tesla. Incredible operating margin, massive gross automotive margins, extremely profitable, and the trend is clear. Things are only getting better from here. I'll be surprised, although not shocked, if we don't see Tesla stock reacting quite positively to their stunning Q2 earnings in the coming weeks, maybe even months. So let me know in the comments below, what did you guys think of Tesla's Q2 earnings? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.